strong believer in Bitcoin. Bitcoin, in my view, is digital gold. Digital gold will ultimately catch up with and surpass analog gold. But as I've always told all my Bitcoin friends, guys, this is a process and it takes years and decades. I mean, gold's got a 5,000 year head start. And the average person, when they think inflation protection, they think gold and silver. They don't think Bitcoin. They don't even know what it is. And like so many people, like the guy I was just at the gym with this morning, he said to me, well, yeah, I was going to buy it, but in a secular bull market for real things, including gold, silver, real estate, Bitcoin. Well, Bitcoin's a synthetic thing, but it's real in terms of the algorithm being limiting its supply.
Lawrence Lepard doesn't compare Bitcoin to gold to sound provocative. He does it because the setup looks eerily familiar. When gold entered its greatest bull runs, it wasn't driven by hype or speculation. It was driven by a slow, creeping loss of faith in paper money. That same erosion is happening again, and this time, Bitcoin is stepping into gold's old role. Lepard begins with silver, a reminder that not all sound money scales silver's bulk makes it inefficient. At higher values, you can store millions in gold inside a small case, while the same space barely holds a fraction in silver. Gold won that battle because it could absorb global wealth. Bitcoin, Lepard argues, takes this one step further. It doesn't just store value efficiently, it eliminates physical limits entirely with a strictly capped supply and frictionless global transfer. Bitcoin resembles gold at the precise moment gold broke free from decades of stagnation and entered its most powerful monetary revaluation back then. Most people didn't believe gold had 1,000s of years of trust, yet it still took a crisis of confidence for the bull market to ignite. Bitcoin is earlier in that same arc. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
The point I guess I'm trying to make is that there's something going on here. And I do think there are some banks and others that are probably on the wrong side of this trade. And I do think that, the exchange, some people say the exchange upping the margins. And by the way, the 30% margin increase, they've only done that one other time before. That's a big increase. And some say, well, they're just protecting the exchange. And that's somewhat true. But it is, as you say, similar to the playbook they used in 2011 to knock the price down, where they jacked the margin rates up quite a bit. The thing to keep in mind, though, on margin rates is it affects both sides. It affects both the longs and the shorts. So, the shorts have got to put up more margin too. And so it tends to affect whoever's the most levered. And arguably, the shorts are more levered than the longs. I mean, in many cases, the people who are buying the contracts long actually would be willing to stand for delivery, or they're doing it to hedge it because they have a legitimate business need for the silver in the future. And in fact, that's one of the things that makes this so damn interesting compared to gold or compared to Bitcoin or some of the other monetary substitutes, is that you actually need this stuff.
Right.
We're not using a lot of gold fillings anymore. Gold doesn't go into electronics very often. There's some places it gets used because it can't tarnish, but silver can. But the fact of the matter is the world needs a lot of silver. We mine 800 million ounces a year. We use more than that. We melt down some of the old stuff in scrap. There's a coin dealer near my house where I go and I see all the old tea sets that the senior citizens bring in when they're running out of money, and they sell their tea set at some fraction of the value of the underlying silver, and he sends it off to a refiner who melts it. And the demand on the solar side and on the battery side, is growing substantially. I've seen numbers that suggest that if solar demand in China continues at the rate that it's now going, China would absorb 60% of the world silver production within a few years, right? And now you've got Toshiba coming out with this solid state battery that uses a lot of silver. And, if you do the projections on that could absorb a lot of supply in the future. So you've got these things, and there aren't stockpiles of it sitting around. There's a lot of gold sitting around. You set the price high enough and gold will come out of the woodwork. Women will melt down their jewelry. But with silver, there's not a lot of it laying around other than in tea sets. And so,
how many tea sets are there really left around, right?
Well, I don't know. I chat GPT'd that. There's actually probably a couple billion ounces of tea sets and silver junk out there.
Candlesticks and stuff like that somewhere. Yeah. But it's not the asset. For the past 2 generations, it's not been the asset it was before. Where every house had a silver set.
Yeah. I mean, people have really forgotten about it. And that's the other thing, Adam, I think is going on here, and why this breakout is so violent and has potential to go quite a ways, is that, for basically, this is the only commodity that for almost 40 years has not really exceeded its all-time high. It was capped at $50, and so it would trade between, I don't know, as low as 11, in the COVID crisis, briefly, and 50 as a high, and it traded in that range for a long time. I mean, I took delivery of 10 Comex bars way back in the day at 1,000 ounces a piece. It bottomed out my cars. I put them in the trunk of my car and it bottomed them out. And and at the time, I think I paid 5,000. Yeah, I was paying $5 or $6 an ounce at the time. So I paid $5,000 a bar. Well, like 10 bars there's 70 pounds a bar basically.
Wow.
So that's 700 pounds.
I hope you still have those bars. You must have been buying this back like in the early 2000s?
Just in the 80s, yeah.
Okay.
80s, 90s, yeah. Yeah, I still do. So, and at some price they'll get, they'll enter the supply side of the equation. But yeah, it's a funny metal in that respect. It's got these two roles. It's got this monetary role, but it's also got this industrial use role. And the industrial people, they're there and they need it. And people say, well, the price goes high enough, there'll be substitution. I know somebody was talking about maybe copper replacing silver in solar cells. I don't know if that technology is real. I mean, silver is really, it's the best conducting metal in the world by far. And it's got a lot of uses. And it's generally a small piece of the value of any particular thing. I think there's probably some silver in your iPhone, but it's probably such a small amount that even if it doubled in price, it wouldn't really move the needle on your iPhone price, right? So, yeah. So it's a funny thing. So where do I think it's going? I don't know. I think we're going higher. I mean, that's my gut is we will see 100, we'll see 125, we'll see 150, maybe we'll see 200. I don't really know, and I don't really know how these banks and the Comex and all the people who've sold all the paper are going to kind of escape from that trap. I mean, I actually kind of worry a little bit about maybe someday there being a zinc-like solution. I mean, China's declared it a critical metal, and they've said that they're going to have export restrictions, and making it sound like it's going to be zero, but it's not clear. They could still sell some. And the U.S. has declared it a critical metal, and it goes into a lot of defense-related things. And so, there could come some point in time when we could 6102 it, which that I'm referring to the grabbing the gold back in the 30s. I mean, if it goes too far too fast, and you could see a government saying, hey, we're not going to permit this. We're going to cap the price of silver. We're going to buy SLV and cash everybody out in dollars, and take delivery of those ounces, and this whole thing is solved. I mean, that kind of thing is a possibility, which is why I've always advocated actually holding the metal versus having any kind of paper claim on the metal, which is what an ETF is.
Bitcoin's price mirrors what's quietly happening in silver today: structural tightness colliding with leveraged positioning in silver. Many financial players remain heavily short, and sharp tools like sudden margin hikes have historically been used to force price pressure. These moves hurt everyone on paper, but the most leveraged side always breaks first. That lesson matters for Bitcoin, where repeated liquidity shocks, forced liquidations, and regulatory stress tests have steadily flushed out weak hands, leaving supply increasingly concentrated with long-term holders. Silver's market shows what happens when real demand refuses to disappear. Annual supply hovers around 800 million ounces, yet industrial use keeps rising from solar to batteries, forcing recycling to fill the gap. Bitcoin faces a parallel dynamic, but with an even harder constraint. Its new supply is mathematically capped and shrinking while demand expands from institutions, ETFs, and sovereign actors.
It has not been a parabolic move. It's been a strong move. And gold to me just reflects the loss of faith in fiat currencies and what happened post, our grabbing the Russian assets. And so, I sincerely believe we are in a, secular bear market for fiat and a secular bull market for real things, including gold, silver, real estate, Bitcoin. Well, Bitcoin's a synthetic thing, but it's real in terms of the algorithm limiting its supply. And therefore, my sense is that gold goes higher. I mean, I put it at 5,000 or 6,000, maybe the end of next year, and I don't think a $10,000 or $20,000 target is out of the question. If you look at historical bull markets in gold, what they've done from the bottom to the top. I mean, if we call the bottom, you can call the bottom either $1,000 back in 2015, or you can call it a more recent bottom, kind of the 2,000, 3,000 area. To my view, we're still in the second or third inning here. So, I'm quite bullish on gold. It's interesting too, and then this is, tooting my own horn, Adam. I mean, I'm really bullish on the miners. I mean, the miners are up a lot this year, but not as much as they should be, given how much the metals have moved, particularly silver.
Yeah. What's the why behind that, do you think?
Well, I think it's a tough business, and the miners annihilated a generation of investors between 2011 and 2015, and I was one of them. It was damn awful. And as a result of that, there's I call it the battered gold bull syndrome, battered gold stock bull syndrome. And, it was just so awful and so ugly. And the businesses are such a tough business that, in spite of the fact that the metal is going crazy and the margins are 60% plus, we're still looking at companies trading at 5 to 7x cash flow when, the big triple Q companies all trade at 50 times or 20 to 50 times cash flow. And, they're both making cash, and a business is a function of its future cash flows. And so, now some of those triple Q companies are monopolies, and so they're probably more defensible than some of the miners are, in the sense that, this is a commodity. But they really, in my view, we're still kind of in the third inning for the mining shares. And although my fund is up a lot this year, I think we'll have a pretty good year next year too. And I think one way, if you feel late to buying the actual metals and you're willing, to size it appropriately so you can handle the volatility, I still think just buying the mining ETFs is not a bad idea. And then more specifically, I pick companies within those because I think, some companies are better than others. But
right, the ETFs have a lot of. I mean, there's a lot of dogs in the mining.
Yeah, they almost they're weighted average. They're based on the weight and the valuations, and some of them are incorrect. So.
What are your thoughts about Bitcoin going forward from here? Has it peaked, or is it just consolidating?
No. Bitcoin, I wrote a book about it. I'm a strong believer in Bitcoin. Bitcoin, in my view, is digital gold. Digital gold will ultimately catch up with and surpass analog gold. But as I've always told all my Bitcoin friends, guys, this is a process and it takes years and decades. I mean, gold's got a 5,000-year head start. And the average person, when they think inflation protection, they think gold and silver. They don't think Bitcoin. They don't even know what it is. And like so many people, like the guy I was just at the gym with this morning, he said to me, well, yeah, I was going to buy it, but, Trump coin came out and I think all that stuff's bullshit. And he's right. Mm-hmm. Trump coin is bullshit, but Bitcoin's not. Bitcoin's an algorithm, and it's a protocol that's going to, in my view, continue to grow. So on a relative basis right now, if you look at the Bitcoin gold chart, Bitcoin is a screaming buy in gold terms. And some people, the gold people say, well, therefore, and Peter Schiff and others say, yeah, in fact, it's a screaming buy because it's going to go to zero. Mm-hmm. And I just don't believe that. I think Bitcoin is going to be just fine. And it's so funny to me, Adam, because this kind of reminds me back in 2023 when Bitcoin was soaring and gold was doing poorly. Everyone thought, oh, this is new digital gold, and gold and silver are dead and they're never going to live, and those miners, they suck, and blah, blah, blah. And Bitcoin was the bright, shiny thing, right? And right now, and nobody wanted any gold and silver, of course, and I hung in there managing my fund, believing they would ultimately work. And right now, gold and silver are bright, shiny things, and they're working great. And everybody who's in them is growing, and I get it. I'm in them too, and I'm happy that they're working. And Bitcoin's kind of a dog, and people are blaming Saylor and MicroStrategy, And to me, it's just a screaming opportunity. I mean, I look at MicroStrategy today. That stock's a 10-bagger in the next 5 years, in my view. And, I'll be buying it, with silver and gold proceeds here next year. I think I made it pretty clear what my weightings were. I think coming into this year, I was about 70% Bitcoin, 30% gold. Well, guess what happens when all the gold stuff doubles in value? Because that was gold stocks, and my fund is up 150% year to date, 148 through November, and I think we're up 10% this month. So, we're going to be up 150, 160% this year. And so,
congratulations.
Thank you. I mean, it's not that much better than the averages, by the way, which is a little frustrating to me, but, full disclosure. But the point is that, you take that, you do that in 70-30 Bitcoin gold, you hold the Bitcoin flat, you double the value of the gold. Well, now I'm probably 60-40 gold Bitcoin. And, so I will be lightening up on some of those gold stocks, not selling them all, not dumping gold. But I mean, this is, to my way of seeing it, this is what a professional investor does. You try to buy what's cheap and out of favor, and you try to sell the things that are screaming.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.